Good morning everyone, and welcome to April the 9th, 2026. We are just going to have a quick run through today. Not much has changed. Markets are consolidating. Thursday, I've experienced, are usually sell days for equities ahead of weekends. So as markets get nervous, we had this tremendous rally overnight on Wednesday. Yesterday, on Tuesday I should say, Wednesday we couldn't breach highs, we traded mostly lower. So let's start today's outlook. So before we start, disclaimer, the presentation is for educational purposes only. Past performance does not equal future results. Please do not construe any information found here as advice or recommendations of any kind. So if you all just keep reading that to the end, and I can begin with what is possibly going to happen today. Let's start with the economic data that's going to be released. This will be interesting. It'll be our first look at core PCE, and I don't think all the effects will have filtered through, as they wouldn't have filtered through to GDP. Personal incomes, but it's going to give us a first look and a first insight into what's going to. So there's a lot of data out today, so we have to be mindful of that. Right, let's start with the euro. As you can see, we had marked out yesterday what was going to happen. You can see what's happened on the 4-hourly chart. Not going to pull up the daily. You can see we've consolidated. We're oscillating around this 116.67 area. We've still got our target that's intact. I still think that's in play, and I think the bottom, there's the range. So we'll call it 116, 117. I think that's the range. The market has to decide what it's going to do. What we've had with all these moves up is we don't have divergence. So there's possibly momentum to go higher, which would mean that there's going to be optimism about the outcome in the Middle East. But so if we achieve that quite quickly, but ahead of the weekend, I doubt. So I think 117 is going to limit moves to the upside, so you can look for setups on lower time frames for sells. If the market was to come down to 116, 115.75, you've got the wave and the tunnel that are waiting there. You've also got a retracement. I'm going to mark the entire move now because we've got a top in place. And you can see that this gap here is between that 38 and 50% retracement area. The oscillators are sitting there waiting for us to decide what to do. The lower valued oscillators are in no man's land, and the higher bungees are waiting to either continue going higher or target to flip over and come lower into this area here. Let's just drill down a little bit further and see if we can tidy this up a little bit more. And there we go. And you can see again, we are literally in limbo. So there is nothing really to do in here. You're going to get chopped. So we can narrow that down. We've got a 30-point range. Let's call it 116.40, 116.70, and we need to break out. Above 70, we probably extend to 117 and above, and below 116.40, we will come down into 116. So those are the levels. Again, you can see the bungees are oscillating around a mid-range level, waiting to move in one or the other direction. So we potentially going to get a fill the gap trade and then complete up here, might get a painting of the royal semaphore, and so, or we will come down into here. So the market is flattening out, so nothing other than that. So I don't think it's worth going any further, because you've got levels around 1617, you've got 1640, you've got 1670. So that's the same is going to be for most of the currencies that we looked at yesterday, because I don't think too much would have changed. So we can see on the daily the big spike. Yesterday I did say that the markets would correct. They didn't like moving away from the wave. They don't like getting too far stretched. You can see on the we've been oscillating now for 12 hours. So again, sterling, you can see 113.25 is your first area of interest. The bungees are not giving you much information. They also undecided, and so we are either going to extend this move into the wave and the tunnel. The wave is either going to cross above the tunnel and we could extend this move. This is trying to get into a 45-degree angle. So trades between 133 and 133.25 are areas that you should be looking at in sterling if you want to be buying, and if you want to be selling. So that would just coincide with all these fill the gap trades. I always look to the left and go and look to see where we came from, and again, so that coincides with the 4-hourly tunnel, and here is the hourly, and so this is going to be a congestion area. So around 133.20 you can have a look for possible trades. Again, you're not getting too many clear signals from the bungees, and if we were to hold this area and break out, you can also put your little
target filled
box around here now and wait for the breakout. In between, there's nothing to do. So you can look for sells above 135, you can look for buys around 133, 25, 40 area, and just look for the setups in the lower time frames to see where those exist. And you can see there. So if we break below this level here, then I would target into that zone. So 132.85, 133. So we've talked about this 133 area just broadly. You can see here, we're looking for direction. Bungees also undecided. Lower degrees have pulled away to the top, but the bigger ones are trying to work out what to do. So that is sterling. Yen, I always just have a look to see how we're behaving around 160, and we are still 160 safe. Our levels that we've marked out over the last are still holding, so there's not much to do there. We always have a look at a cross that involves the yen, and again, so the euro is trying to stretch away and trying to, let's have a look and see what we've got. So we've got divergence here, we've got a level down here, so I can see that any pullback into that range there, which will be a nice pullback into the wave, and a possible fill the gap trade that could set up in this range here, and that sets up nicely between 184.5, 184.80, and if we were to hold that level, we would then obviously move back up to 186.35. So again, the markets will tell us what is going to happen in the coming hours. Let's have a look at the Canadian dollar. And again, pretty tight. This looks a bit flaggy. We've got a trend line. We've got a flag type shaping. We've got the wave rolling over. We've got the tunnel that is congesting, showing some sort of congestion here at this level here. So there's your first line of support around the 138 level. We know where our resistance is. We've got trend lines that are helping us there. There's a high. So there's a number. So 138, let's call it 138, 140 is the wide range. Let's try and narrow that down. This looks flaggy. It looks like it's going to come down to 138 before it goes to 139, excuse me. So I wouldn't be surprised to see a retest of these lows, a possible repainting, and then we've got decisions to make. You can see that the stretchaways have been pulled back to the more dominant trend down at the bottom, and so I would imagine that if we came down to this 138 level, we're also going to get divergence unless it's a very sharp move, repainting of the royal, and then you can start looking for a breakout one trade for a move back up. So that's the Canadian dollar. The Aussie dollar. Let's go. No point in going to the daily. So we're still intact there. We're hovering. We are just, are we going to come down to 69.60, where we've got the wave that's trying to cross the tunnel, where we've got either a rolling over of the higher valued bungees and them coming down here, maybe the data at 8:30 US time, or any news items that come out that will give us an indication as to what's going on. The one that I did look at, which is New Zealand dollar, which has seemed to be moving quite a bit more than the others, because that had a big spike up on the news. Also might be worth looking at, and I can see it here. So this might want to go a little bit higher and target the area up here, 59.15. We have got the wave that's trying to come up to the tunnel. I would have thought that we would look for some support in this 57.70, which is a 50% retracement of this value here. So this area here has got to talk to you. You can look at levels on lower time frames at 57.75-ish for possible corrections. If we go up here, I would look for sells around this 59.15 area, and if we come down to 57.75, I would look for buy trades. Again, on lower time frames, not on the 4-hourly. The 4-hourly just gives you broad brush strokes as to what is happening and occurring out there. So those are the currencies. So as you can see, we're in a state of flux. We're now waiting for decisions to be made, for markets to give us some sort of insight into which way we're going to go. Ahead of a weekend, I'm always skeptical, because I am wary that there's so much that can happen over a weekend, and we need to be mindful of the market, because it's going to protect itself against any possible adverse moves. So move to futures and the indices and have a quick look and see what's going on there. And we've got our big spike up. We've got gaps in this now. We've got gaps. Markets don't like gaps. Markets don't like weekends. Too much can happen. So what do we think? Do I think that we're going to go up and test these highs? No, I don't. I would use these as selling opportunities. We can see a nice congestion area here between 24,106 and 24,375 that will satisfy a gap fill, which will pull us back into the wave and the tunnel. So around this area here is going to possibly, we've also got a rolling over of the bungees that could come down a little bit. They might not get through 50%. We've seen from time to time now because of the volatility that's in the Nasdaq. So we might that we don't always fulfill, from one side to the other. So I would expect something similar again. So broadly speaking, those are the levels that I would be watching. You can see it a little bit more clearly. You can see the gaps on the hourly chart. You can see this strong spike. So first level of interest is there, 24,935. I favor a fill the gap type of trade and move closer to 24,500, and then we've got a decision to make. Are we then going to use that as a platform then to go and test higher, back above the highs that we saw on Tuesday and Wednesday? Or are we going to continue this move lower? And what I mean the move lower, we'll just flick over to the daily chart quickly, and it's that move lower. You can see if I just switch that around quickly and did that, you can see that we would be targeting, if we held those lower levels around that 24,400, 500, that we would possibly test 25,700, 870, get into that sweet spot of a retracement. But ultimately then we would still be looking for lower rates, down towards 21,000, 22,000, 21,000. Again, we are at the mercy of the outcomes of problems. Let's have a quick look at the S&P. Same story. You can see the levels. You can see we just now, we don't know what to do. Is the market going to get very bullish ahead of the weekend and any talks that are going to come through? No, because you've got too many days of unknown. So again, I would expect a fill the gap kind of trade. I would expect a move back into this 67, 75. A number that I'm watching is 67.85, which is with this box and the wave. So watch the number 67.75. Let me see. And there it is. A break below there. So I'm going to extend this box. So we're either going to stay in this range of 67.75 and 68.80. So that's the range. I would not anticipate us breaking above that level before the weekend. And this is your pivot point. We break below and stay below 67.75. We are coming back down to 67. And watch that level on a closing basis. Very important. You can see here on the bungees, they're not sure what to do. Are we going to have a snapback? Are these going to roll over? So we've got decisions to make. No point in going any further because the levels have been defined. Right, the one that's causing all the angst in the markets. So there's our sell-off that we got from the 2-week ceasefire. You can see what we've been doing now. We're not sure. We tracked, everyone talks about the 100 level. Same thing on the bungees. They're not giving you any real clues. Are we snapping back? Are we going to go up? What are we going to do? To try and guess what's going to happen with this, very, very difficult. Again, if you're just doing trades, just watch areas of consolidation and look for breakouts, and then use the tunnel as pivots and as targets and entry levels. So for now, I don't think we've got a wide range of 90, call it 9120, which is for, if you look at oil historically over the last few years, that will tell you the story. That this is crazy. Because look at that. We did nothing. We did nothing. We did nothing. We had a nice range bound market, and then all of a sudden we were off to the races. And so now this will not settle down until we have people going back to the drawing board, sorting out and negotiating what's going to happen in the Middle East. And so until then, that's it. So the vulnerable side is obviously the upside. Very difficult taking short positions in this. But if you were to do that, you can obviously look around 102, 103, and then 110 area. But if I was anybody, I would stay out of the oil market. Let's have a quick look at the gold.
Stop filled.
And the song is the same. We're in a state of flux. We don't know what to do. We are looking for direction. Frame out your range. Stay out of it, inside of your range. It's just not worth it at the moment to get involved in trading these markets and get into a position where you are exposing yourself unnecessarily to wide swings and let me just see if in the lower time frame, because you can get very aggressive moves and so just look, identify ranges, look at the tools that you've been given by Wavy Tunnel, frame out your moves, see what we're doing. This is our range immediately. The last impulse, the last move higher, so you've got 46.30 to 48, very wide. What else are we in here? So we're oscillating around this key level. You can see everything's now going to become congested. The wave, the tunnel, the range is going to narrow, so we will get a breakout. So we will either break out to 48 and a quarter, or we'll come and retest the lower end. Which way? I don't know. Even this, it's all in the setup, and we're all at the mercy of whatever is going to happen today. So those are the currencies. Those are the futures. Look after yourself. Have a safe weekend. I will do, instead of doing a Monday one, I might do a more detailed and include a few more currencies for, I'll do it on Sunday so that everyone's got it early on Monday. So until then, take care, stay safe.